Hey guys, Dave Keller here with Market Misbehavior. I'm here in Snoqualmie, Washington, which is not far from where we just relocated to from Northeast Ohio. Getting ready to join stockcharts.com here in town next week and just exploring the area a little bit. Wanted to share a quote that I tweeted out earlier this week from Greg McKeown, who has written a fantastic book that I'd suggest to you. Basically it's follow not in the footsteps of the masters, but rather seek what they sought. And it's funny with investing wisdom, I find a lot of times people read some of the classic investing texts or even more recent ones, and they're trying to find the holy grail. They're trying to find that one indicator or technique or investment process that's going to allow them to stop searching and just kind of focus on that and just start making money with it. And if there's one thing I've learned over my career is that's just not the case. There's no holy grail. There's no one thing you can find. There's no finish line to this learning process as an investor. It is a perpetual process. And I saw that early on when, some of my early mentors taught me how they were, always be a student of the markets, and they were always trying to learn and try to absorb and try to ask questions of people that knew more that they did or had different experiences. So instead of looking at classic investment books, now I should qualify certain things, I would say, like Benjamin Graham talking about, essentially behavioral finance and investment psychology, but also valuations. Those have stood the test of time. There's value in understanding valuations and understanding momentum and things like that. Those are, I would say, the basic building blocks of an investment process. But in terms of the get rich quick, how to make $1 million types of reading, don't read those as a prescription. Don't read those as a rule book that you need to follow or that you can follow to get a certain outcome. Read those for inspiration about how you can develop your own process, right? Think of what they were trying to do. And remember, for that period of time, at that point when they wrote that book, they are describing the solution that they came up with. Your specific investment process, your specific investment horizon, the way that you're trying to go about it could be a little different. And certainly the market environment is very different than any book that's been written because the markets are always changing. So you need to look at those and absorb them and take what you can, but think of it in more of a timeless way. Think of something that is time sensitive, but apply it in more of a timeless way. How can you use those to think like a better investor or to improve your process, your decision-making process? Not create a new process, but how can you, over time, improve your own process? The last thing I would say is, remember, in terms of following in the footsteps of the masters and instead seeking what they thought, one of the best ways you can seek what they sought or understand what they were looking for is by asking good questions. Find mentors, find people that have been doing this longer than you have or in a different way that you have, and ask them questions, understand, get inside their head and understand what was motivating them, what was that final goal. If this sort of thinking of investment process and decision making is of interest to you, I hope you'll check out some of my other videos on the Market Misbehavior channel and just go ahead and hit subscribe. Thanks so much.